Hello, good morning to all. Welcome to today's Daily Dose of Market Insights by OANDA. I'm Kelvin Wong here, the Senior Market Analyst of OANDA Asia Pacific. So before we start our Daily Dose, today is Tuesday, 19th of December. Yep, let's take a look at the disclaimer slides first. All right, leverage trading carries a high degree of risk and may not be suitable for everyone. Losses can exceed deposits. This presentation is not an offer or solicitation to buy or sell, nor financial advice or recommendation for any investment product, as well as any forecast, prediction, or projection in this presentation is not necessarily indicative of the future or likely performance of the product. This advertisement has not been reviewed by the Monetary Authority of Singapore. All right, so as usual, we will keep track of what has taken shape yesterday. So yesterday is a pretty much quiet day in terms of economic data releases. Not much key economic data releases except for the US housing data. So if you look at the US housing data over here, let me share my screen so that you guys could see. 1 second, let me switch my screen over. Okay, yes. So if you look at the economic data yesterday, so yesterday the NAHB housing data. So the data actually came in slightly better than expected. 37 above consensus of 36 and also above the previous we call it a month of 34. All right, so if you look at the housing index trend in US itself, it's still in pretty much of a downtrend except that last month November, yeah, December, for the month of December, it actually has a slight uptick, but still below its previous, we call it 6 month of downtrend in the US housing market. But overall, what you could see over here is that the momentum, the bullish momentum in the US stock market in the short to medium term remains intact. So overall, if you look at the performance of the S&P 500 heat map over here, you start to see much more green versus red. And yesterday, outperformance is being led by the mega cap stocks again, which is the high quality, high growth technology sector. Google, Meta, Amazon, and Nvidia actually outperform. So that we start to see outperformance of the S&P 500 at 0.45%, with the Nasdaq outperforming at the outperformance of the Nasdaq 100 at positive 0.64%. Slightly above S&P daily performance of 0.45%. The Dow Jones Industrial Average almost unchanged. The Russell 2000 underperformed slightly with a minor loss of negative 0.14%. And if you look at the Nasdaq 100 based on the cash index over here, yesterday it actually kind of almost retest its all-time high at 16,765, very close to it. So if you look at the current situation over here, there's no clear signs of a bearish exhaustion over here. And even the RSI, it hasn't really hit, it just hit its overbought level. Okay, overbought level, but there is no clear signs of any what I call bearish divergence at this point in time. Okay, just hit the overbought level. So all in all, right, what we could see over here is that the current, yeah, we know that if you look at the weekly, okay, this is the weekly, pardon me, this is the weekly. My apologies, go to the daily. Okay, so the daily over here, even though the daily RSI on the Nasdaq 100 has hit the overbought region, but price action going to inch higher, reflected by higher high on the RSI as well. So there is no clear signs of any signs of what I call medium-term bullish exhaustion at this point in time, even though the Nasdaq 100 has started to show 7 week of up move, 7 week of higher closes, 7 week of, we call it 7 weekly higher closes. But we know that momentum could actually continue, especially we are now heading towards the seasonal end, we call it the Xmas rally, and also that very likely there will be much drastic movement given the fact that now it's approaching year end as well. Okay, so this is more more on the stock market phase. So today's important data will be the Bank of Japan. So I'll highlight Bank of Japan over here. So Bank of Japan actually releases just a while ago their monetary policy decision. So no change at negative 0.1%. So the negative their short-term negative interest rate still remains intact. no change to the yield curve control program as well. So that's really market expecting. But what's interesting over here is that we're going to be patiently waiting for the release of their policy statement, which is out later at 12 p.m. Singapore time, and as well as BoJ Governor press conference at 3:30 p.m. Singapore time. Why? Because right now there seems to be mounting pressure from the private sector, urging BoJ to normalize its interest rate policy as soon as possible. So there's this actually remark by this prominent, we call it this business lobby head yesterday. He made actually a statement that BoJ must, like I mentioned earlier, BoJ must normalize monetary policy as soon as possible. That means, i.e., a shift away from their short-term negative interest rate since 2016. So all eyes and ears will be on the policy statement released later on at 12 p.m. Singapore time, as well as BoJ we call it press conference at 3:30 p.m. Singapore time. Why? Because we will start to be seeing, is there any slight hint or change of language that we maybe start to see an imminent policy shift as soon as early part of next year. That means the next year over here is that we are talking about in January. So in January over here towards the next meeting in BoJ in January. So if you look at the BoJ meeting, okay, let me share your BoJ meeting. Okay, so the next January one is pretty crucial. Why? Because it gives a good time for a policy change. Why? Because it was also released in conjunction, so 23rd of January next year, in conjunction with the outlook report. All right, so if BoJ were to do any changes, this will be a good time. Why? Because it's start of the year. If it do to April, it might be a bit late because this over here in time, it will actually release its latest economic outlook as well. So if BoJ has a view that wages is on a path of sustainable upward trend, it could actually use the January 24 monetary policy meeting outcome as a chance for them to actually get rid of that current short-term negative interest rate policy. All right. So right now, current market reaction so far. Okay, you look at the now let's look at the current market reaction. So this is the key highlight really. So now let's jump straight to the short-term technical outlook. So short-term technical outlook. Let's look at the FX market first. So for the FX market, right, if we look at the current situation right now over here, this is the 1 month rolling performance of the FX market. So this is a longer term picture, 1 month rolling performance as of today. So the dollar yen, yeah, we could see it spiking up after that, we call it no change in that monetary policy meeting setting. That means keeping short-term interest rate at negative 0.1%. The dollar yen spike up, but so far, month to date is a rolling 1 month, is still outperforming the US dollar. That means dollar is still the worst performer against the yen at negative 4.4% and negative 4%. So if you look at the shorter term perspective from a rolling 5-day, it's about in the middle right now because due to its current spike up, intraday spike up at, okay, so it's registering, the dollar weakness is registering at the rolling 5-day of negative 1.2% in the middle because it's spike up. So after this spike up in the dollar yen, right, what has it altered the short-term trend of the dollar yen? Okay, so let's look at the hourly chart over here. Okay, let's go to the hourly chart. Let me also expand my screen so you guys could actually see much clearer. All right, dollar yen. Okay, so this is a dollar yen chart. So over here, right, if you look at the dollar yen chart over here, is that where it spike up? It spike up after flirting around the 200-day moving average in the last 2 sessions. So this is a big spike up over here. So this big spike up over here, right, even though it spike up, it still remains below the 20-day moving average over here at this point in time. And as well as if I were to do this 13th of November, right, is the start of this short to medium term downtrend of the dollar yen. So if you were to look at this point in time, I do a Fibo retracement all the way from the low. Let me put it correctly again from the high. Okay, so it's still below the 38.2% Fibo retracement. And if you were to do a trend line analysis, taking from the swing high of here, connecting as much point as possible, 1 time, 2 time, 3 time, 4 time, 5 time, rejected. And right now it's around this level at slightly above it. Okay, let me push it higher. The 38.2% is 145 level. Okay, let me put it here. Oh, 4505. Okay, this zone here. Okay, so despite it's spiking up above the 143.30 short-term pivotal support we highlighted yesterday, right at the 200-day moving average after hovering it, but it's still below this key resistance at 145.05, which is the 38.2% Fibo retracement of this ongoing short to medium term downtrend phase that is in place since 30th November high, and as well as confluence with this congestion area here, 8th of December to 12th of December, and as well as this minor descending trend line that is in place in 16th of November. So there's a couple of interesting elements confluencing all at this 14505 level. So for today, right, given that it will be a volatile day session because we have yet to see the release of the policy statement, and as well as the press conference at 3:30 p.m. Singapore time. So let me do a refresher to see whether has the press release, the statement has been released. All right. Okay, no, nothing. It hasn't. There's nothing over here yet. There's no hyperlink. So it's usually 12 p.m. Singapore time. Then they will release the press statement. So they're slightly different from the Fed, where the monetary policy outcome released together with the same time of the press statement. So BoJ, there's actually a close to about a 1 hour lag. Okay, so no release yet. The press statement. Not the press statement, the policy statement. Pardon me. Okay, so with that, right, so I do not want to have a key short-term pivotal support that is so tight. So I'll be using for sure, because this confluence with a couple of interesting elements, confluencing all at 14505 level. So still using 14505 level to maintain that short-term bearish outlook on the dollar yen. As long as this level is not surpassed to the upside, potentially, right, a retest at today's Asia session low, 14228 level will be the first support level to watch. A break below this level potentially exposes last week swing low at 14095. Okay, 14095. So these are the key levels to watch. But for sure, if we start to see a bearish breakout above this 14505, then potentially we start to see a much more we call it a counter trend rebound towards the next resistance at 14670. Okay, 14670. Okay, so that will be the key levels to watch. So still maintaining that short-term bearish outlook on the dollar yen, holding below 14505 level. With first support level will be today's current intraday low, 14230. Below it exposes last week low at 14095. All right. Then that will be the dollar yen. Then will be the Aussie dollar. So Aussie dollar, no impact from the dollar yen. Dollar strength seen in the yen. So Aussie continue to strengthen for today's during Asia session. So it's up 0.31%, trading close to Monday's high, yesterday's high area. So for sure, no change. I don't want to put it so tight at 66.90, which was yesterday's US session low. So I'll be using 66.70. So as long as 66.70 is my key short-term pivotal support level, still maintaining that short-term bullish outlook on the Australia dollar, with the next resistance to watch at 67.40, followed by 67.90 on Aussie dollar. However, a breakdown below 6670 will negate this bullish tone to see a minor corrective decline to retest the 20-day moving average, now acting as a support level at 6620. We saw confluence with the former minor swing high of 8th of December turns into a pullback support at the same level as well, 6620. Okay, so European currency. So for the European currency over here, the euro dollar actually yesterday traded a kind of higher, right above the 20-day moving average, where we highlighted. So that's our key short-term pivotal support. So still no change. 10870. So 10870 key short-term pivotal support, maintain that short-term bullish outlook. First resistance to watch will be 0960. So a break above 0960 exposes the next resistance at 11010/11040. However, a breakdown below 10870 will negate this bullish tone to see a minor corrective decline to retest this 10820/10 780 support zone, which confluence with the 20-day moving average, as well as this upward sloping 50-day moving average, which will be soon confluencing with 10780 as well. Okay, so still maintaining that short-term bullish outlook as long as 10870 short-term pivotal support holds on the euro dollar, and also be supported by a series of higher low that's being seen on the hourly RSI, now moving up towards above the 50 level mark, which indicate to us some signs of bullish, we call it a momentum, short-term bullish momentum coming back into the picture as depicted by the hourly RSI. With that, sterling dollar remains also on track, continue to inch higher above 126.10, key short-term pivotal support level that we highlighted yesterday. We also confluence with this rising 20-day moving average. So still no change, 126.10 key short-term pivotal support. Maintain that short-term bullish outlook on the sterling dollar, with first resistance to watch will be at the 128 figure level, psychological, as well as the minor swing high of 15th of December over here. And RSI right now also starts to actually inch up after testing the overbought level yesterday. All right, inching up. All right, so however, hourly close below 126.10 invalidates this short-term bullish outlook to see the continuation of this minor corrective decline to test the next support level at support zone of 125.45 / 125 figure level, which confluence with the 200-day moving average over here, and as well as the medium-term ascending trend line that is still intact since the low of 1st of November. Okay, so still maintaining that short-term bullish outlook on the sterling dollar as long as 126.10 short-term pivotal support holds. So in a nutshell, what we could see over here is that dollar continues to remain weak technically in the short term. Now, stock indices over here is that yesterday Nasdaq almost hit, we call it coming to hit an all-time high on the cash market. So let's start with the Nasdaq 100 first. Okay, so Nasdaq 100 yesterday we do have a bullish bias. Price action inch up towards our all-time high. So this all-time high 16,770 is in our OANDA's trading platform. We call it US NAS 100. So what we could see over here is that there's no clear signs of a bullish exhaustion yet in the hourly RSI. So hourly RSI, there's no we call it bearish divergence. Yes, it hit overbought left yesterday, and after that it's time to work out for its overbought work out its overbought reading by inching downwards. No. Prior to that, there is no what I call bearish divergence. No divergence. Price action going to hit. RSI going to show higher high in line with the price action on the chart itself. So with that, right, I will be using a Titan key short-term pivotal support for today. Previously was around 16,300 level that we have, right, or 6,400 level, pardon me. So I will be pushing it up to 16,660, slightly I don't leave it so tight, yeah, by using that by I do not put it so tight over here, tight as in this level, this one. Okay, this level, which is at 16,690. So just use this level as a minor pullback area as long as it didn't break below 16,600 level, which was last Friday's swing low. Price action could maintain its upward trajectory, which is the bullish momentum. So still maintaining that short-term bullish outlook as long as 16,600 short-term pivotal support holds. Next resistance to watch out for will be at 16,950 / 16,990 in the first step, which confluence with a Fibo extension cluster. All right. So, but however, a breakdown below 16,600 will invalidate this short-term bullish outlook to kickstart a much more extensive minor corrective decline within its short to medium term uptrend to retest this minor congestion area of 13th of December and 15th of December, which is we call it that swing low over here at 16,430. All right, 16,430. So still maintaining that short-term bullish outlook on the US Nasdaq 100 for today, with a Titan key short-term pivotal support at 16,600 level. Okay, for the US Wall Street 30, it remains flat yesterday, pretty sideways, holding below the first resistance that we have at 37,455. All right, 37,455. But price action on the RSI starts to remains pretty much constructive on the positive side of the story. Why? Because if we look at the current price of the RSI, Okay, it kind of remains supported by this parallel ascending trend line support level, and it's now inching back above the 50 level mark. So indicating some signs of a resurgence of positive bullish momentum, at least in the short term. So with that, I do not want to tie it so tight because this is last Friday swing low, which is at 37, last Thursday low at 37,110. So I'll be still using this pivot here at 36,890, 36,970, 36,890 as a short-term pivotal support level to maintain that bullish outlook, unless we have a clearance above 37,450 later, 37,455 later, then my short-term pivotal support will be tightened to 37,110. So for now, still remains the same above 37,454, pardon me, with tongue twisting, above 37,455 sees the next resistance coming in at 37,800, which is defined by a Fibo extension cluster level. However, a breakdown below 36,890 will invalidate this bullish impulsive sequence to see the start of a minor corrective pullback. Still, we in a short-term uptrend phase of the US Wall Street 30 to retest 36,650, 36,560, which confluence with the minor ascending channel lower limit now acting as a support. This is this channel here is from the low of 10th of November. Now it will be acting as a support at 36,650 slash 36,560. And also soon the rising 20-day moving average as well. So all in all, right, even though if price action doesn't start to hit up and start to break down below 36,960, 36,890, potentially it could start to evolve in a minor counter trend, minor pullback scenario rather than the start of much more substantial bearish move, because price action is still trading above the minor ascending channel support and the rising 20-day moving average. So still maintaining that short-term bullish outlook for the US Wall Street 30 using 36,970 slash 36,890 as the short-term pivotal support level. Okay, a bit disappointing on the European currency, where yesterday it actually underperformed. So the German 30 actually broke below 16,735 short-term pivotal support level that we have since last week. Yeah, since last week. Okay, so what we could do over here is that I will have a, because price action, very interestingly, right, the RSI starts to bounce off from the oversold level at this point in time. So a bit mixed element right now on the German 30. So with that, I'll be flipping to a neutrality stance. That means sideways between 16,735 and 16,590 for today, which confluence with the minor congestion area of 6th of December and 7th of December. Okay, so that's how I define the 16,590. Okay. However, if we start to see a slide and break below 16,590, then this will be potentially a minor corrective pullback to retest this rising 20-day moving average at 16,440. So overall, the short-term uptrend still remains intact. Why? Because price action is still hovering above the rising 20-day moving average as depicted over here on the hourly chart. So only a clearance above 16,735 today will revive that bullish, short-term bullish outlook scenario to at least retest the intermediate resistance at 16,910. Okay, so that's the outlook today for the German 30. So flipping to a neutrality sense or sideways between 16,735 and 16,590. Okay, so with that, right, let's take a look at the Japan 225. So the Japan 225, right, after BoJ monetary policy meeting over here, so we start to see a minor bullish breakout on the Nikkei 225, holding right above after a test on 8th of December, 14th of December, and yesterday at this rising 50-day moving average. So right now it's actually trying to break above the 20-day moving average. But if you look at the price action, it's clearly broken out this minor descending trend line that is in place since 27 November low. Okay, tested one time, two time, three time, fourth time, and today it did a bullish breakout. Okay, so with this bullish breakout over here, given the fact that the policy statement hasn't been released yet, I do not want to tie it so tight at this pullback support here of 32,840. So I'll be still using this 32,560 as a key short-term pivotal support level for today, maintaining that short-term bullish outlook on the Nikkei 225. With the next resistance to watch will be at 33,570, followed by 33,825, which is this medium-term range resistance that is in place since 20th of November low. 20th of November and 25th of November swing high. Okay, so having a short-term bullish outlook on the Japan 225. Okay, however, a breakdown below 32,570, then we will start to see another round of choppy movement to retest the 8th of December swing low area at 32,200. Okay, so that's for the Japan 225 short-term technical outlook. Okay, now, other Asia currency will be the Hang Seng, will be the Hong Kong 33. So Hong Kong 33, a bit of choppy movement over here, but what we could see over here is that yesterday, yes, it kind of underperformed the market. The general market is going to inch downwards. So during today's Asia session, it is attempt to actually fight back. So how does it fight back? This fight back over here occur very close to a minor ascending trend line support level that I draw from the low of 11th of December, being tested on the 14th of December, and right now attempting to shape a rebound slightly above it. So this level is actually acting as a support level at 16,330 for today. So for today, I'll be using 16,330 as my short-term pivotal support to actually maintain that short-term bullish outlook on the Hong Kong 33 to at least see a retest on the intermediate resistance at 16,890 that was retested on last Friday before this pullback take shape since yesterday, and also confluence with the 20-day moving average as well. Okay, and what's interesting is over you see over here the RSI started to shape a rebound, and the RSI right now has indeed flashed a kind of a bullish divergence, higher low slightly above the oversold level, whilst price action traced a lower high earlier this morning. Okay, so a bit of what I call downside momentum has really started to ease from the downside momentum that took shape since late last Friday has started to ease by the bullish divergence that's being depicted on the hourly RSI. So still maintaining that bullish bias on the Hong Kong 33, holding above 16,330 short-term adjusted short-term pivotal support for today. However, a breakdown below 16,330 will invalidate this bullish short-term bullish outlook to see a further slide to retest the major support zone of 16,100/15,890. Okay, so that's pretty much sum up for the FX market. So let's us go to the commodity market. So let's start with oil price first. So yesterday oil price continued to pinch up much higher. The West Texas crude oil platform actually rose to positive 1.06%. Why? Because there's actually a potential supply chain disruption due to a Red Sea pirate attack at the Red Sea area. Okay, so that actually causes that positive news flow to actually see a further short-term push up in oil price, which we already been anticipating since late last week in terms of the technical analysis for those who actually followed our daily dose of market insight. So we flipped to a bullish bias since last Friday. Okay, so with that, right, oil prices going to inch up much higher. So what we could see on the hourly chart itself over here is that yesterday it intended to actually test the 20-day moving average, I think, as a support level, resistance level at 73.40/74.10 before shaping that pullback over here. So with that, we are still maintaining that short-term bullish outlook for oil price, but for sure, with having a tighter key short-term pivotal support for today, which was the swing low of Monday and as well as Friday at 70.90. Okay, so as long as 70.90 holds and the breakup above 74.10 potentially could expose us to the next resistance area at 78.40, which confluence with the 200-day moving average and the 50-day moving average as well, conversing at 78.40. But this is provided that it could actually clear above 74.10. Okay, so as long as a 70.90 short-term pivotal support holds, maintain that bullish outlook, clearance above 74.10 increases the odds of this continuation of this minor counter trend rally towards 78.40, which is the 50-day and the 200-day moving average. However, a breakdown below 70.10, we will start to see a retest of the major support zone at 67.55/67 level. Why is it major? Because this is the swing low area which led to that previous sharp 20 to 30% rally, summer rally. So over here, so this is a major support area. If 70.90 is being taken out, it could see a retest at this area again. All right, so that's the outlook for oil, still maintaining that short-term bullish bias, 70.90 with a potential upside trigger level at 74.10. Gold price, spot gold, which is XAU/USD. So XAU/USD continue to remains in a bullish short-term bullish dynamic, holding above the 20-day moving rising 20-day moving average at 2017. So we'll be using 1997 no change as a short-term pivotal support level. So this 1997 will be confluencing with this rising 50-day moving average as well in a couple of days time. So first resistance level to watch will be 2043. Above this level potentially sees the next intermediate resistance coming in at 2067/2075. However, a breakdown below 1997 will invalidate this short-term bullish outlook to see another round of choppy minor corrective decline sequence to retest the medium-term support zone at 1965/1955, which confluence with the 200-day moving average as well. So all in all, no change, still maintaining that short-term bullish outlook on gold, XAU/USD as long as 1997 key short-term pivotals resistance support holds, key short-term pivotal support holds, with the first resistance level we call it the potential upside trigger level at 2043. Okay, so that's the outlook for gold. So other than the BoJ policy statement that is out later at 12 p.m. and 3:30 p.m. BoJ Governor press conference, what other key economic or data to watch out for today? Will be for those who are actually looking at the Canada market, you have Canada inflation out at 9:30 p.m. Singapore time, and with that, pretty much quiet session for the US session, other than another housing data. We call it the housing stats data for the month of November, which is will be released at 9:30 p.m. Singapore time. So other than that, pretty much quiet economic data releases for today. So with that, do have a great day ahead, and we shall speak again tomorrow. Thank you.